Hi, I'm Greg Hunter, and this is the weekly news wrap-up for Friday, December 30th, 2011. The big story with global implications: Iran is threatening to shut down the Strait of Hormuz. Now, the reason why they're doing it is because of increased sanctions, mainly from the U.S. and EU, over Iran's nuclear program. Now, Iran has always contended, they've always said, that their nuclear program is for the peaceful production of energy. Nonetheless, tensions are building and have been building. In the last few days, Iran has been running drills on shutting down the Strait of Hormuz. Also, one of our aircraft carriers just yesterday, it was reportedly surveilled by the Iranian military. They shot video of the USS Stennis. That's a very provocative action in this kind of environment. Now, if the Strait of Hormuz gets shut down, and even if only part of the oil is constricted, the world economy that is so fragile would certainly spiral downward out of control. It would tank. On top of that, if the strait is shut down, China would likely side with Iran. It has said it will side with Iran because the Chinese get a lot of Iranian oil. The Russians also would side with Iran because the Russians are helping the Iranians with their nuclear program. This could turn into World War III in a very short order. It would certainly kill the fragile world economy. You can forget about the EU debt crisis. If people started paying $6, $7, $8 a gallon of gas here in the U.S., or $10 or $12 a gallon in the European Union, the economy would almost grind to a halt. On top of that, there's some other real wild cards in North Africa and the Middle East. I mean, just look at what's going on in Libya. Yeah, Gaddafi's out, but that country's politics are far from settled. And then there's the violent protest in Egypt, in Syria, and in Yemen. On top of that, Saudi Arabia, which has been pretty calm of late, they just agreed to buy 80 additional U.S. F-15 fighter jets. What are they getting ready for? What are they afraid of? It's not peace and harmony. It looks like they're afraid of war. I hope it doesn't happen. But this thing could spin out of control in a hurry. Next up, the European debt crisis, which was really is nothing more than a European banking solvency crisis. They got a lot of big banks over there. They're hung out on all this sovereign debt, and they're basically needing a government bailout. Otherwise, they're going to be insolvent. That's what it is. And I'll sum it up in one sentence. Nothing has been fixed. Period. The end. Oh, they've kicked the can down the road. They've made some more loans available to some of these big banks to buy up some of their debt, but nothing's been fixed. I predict it'll come down to a bizarre scenario of a bailout and default. Some banks will default, go bankrupt, go out of business. Other banks that they pick to survive, they'll print tons of money to bail them out. This is trillions and trillions of dollars. Now, either the bankers go into bankruptcy, lose power and default, or they print money. What do you think they're going to choose? On top of that, remember MF Global, the 8th biggest bankruptcy in the world? They were trading in this EU sovereign debt, this sour, toxic debt. You know, John Corzine, the CEO there at MF Global, was playing the bailout trade. Well, they didn't start the bailout fast enough, and he couldn't stay solvent until the bailouts happened. Well, it's been reported that George Soros and J.P. Morgan Chase have picked up those trades. Now, what do you think is going to happen? Do you think J.P. Morgan Chase is going to lose tons of money there? Do you think George Soros is going to lose tons of money? Or do you think somebody at J.P. Morgan Chase or George Soros could pick up the phone and call somebody at the Fed or call somebody at the ECB and say, hey, things are getting out of control now. It's time to print money. The austerity measures aren't really going to work. We really need massive money printing and bailout. That's what I think is going to happen. Next up, Iowa caucuses. They're coming out next week, and who would have thought a year ago that it would come down to Mitt Romney and Ron Paul at the top of the heap? I'll tell you, even if Ron Paul doesn't get the nomination for the Republicans, and he may, he has certainly made it interesting and provoked a lot of thought about what's really going on with our country. That's for sure. Next up, we got to talk about John Williams. You know, I quote John Williams all the time. He's one of the economists that I quote for the actual true numbers without all the gimmicks and the accounting stuff in there that makes things look better than what it is. I just want to know exactly what it is. And John Williams does that week in and week out at shadowstats.com. Remember a few weeks ago he said, I quoted him saying that the real annual deficit for America isn't 1.3 trillion or just under 1.3 trillion for 2011. It's more than 5 trillion. Well, the GAO, the Government Accountability Office, came out this week, and basically their figures back up what John Williams say. Why? Well, John Williams counts everything. They call it generally accepted accounting principles. He counts it all. He counts the cash. He counts the commitments, or what's going on in Fannie and Freddie, and Social Security. He counts it all. And if you count it all, the 2011 annual deficit wasn't 1.3, it's over $5 trillion. And you know what the GAO also said? They said that, hey, 2010, also almost $5 trillion if you take out all the accounting gimmicks and count all the commitments. That's almost $10 trillion in just 2 years' time. You wonder why Barack Obama is asking for another raise to the debt ceiling? We just raised it in August to $2.4 trillion, and they want another $1 trillion raise? That makes sense. Next up, Meredith Whitney. You know, one of the things I wanted to talk about, seems insignificant, but a lot of people have been kind of chiding a star banking analyst, Meredith Whitney, who I respect and like a lot. She's made some great calls. But she made a call at the beginning of this year saying that there'd be, something like 100 municipal bond defaults. Well, that didn't happen. And I'm thinking, how could somebody like Meredith Whitney be that far off? Could there have been some covert action by the Fed or the Treasury to prop up the municipal bond market? Did they go in there and buy those bonds? I mean, is that such a far-out idea with the President's working group on financial markets, the plunge protection team, which basically manipulates the stock market, and all the allegations at COMEX for gold and silver? Could the Federal Reserve or the Treasury interceded and covertly bought some of this municipal debt to keep it from imploding? I don't know. But I'll tell you one thing I hope. I hope I hear from Meredith Whitney early on in 2012. It will certainly be interesting. Finally, Dennis Gartman and gold. I got to talk to you about gold. A friend of mine called me today and said, wow, I'm really worried about gold. I said, don't worry. Nothing has changed. I mean, look at this. They're possibly closing down the Straits of Hormuz. That's going to spike oil prices. The EU, nothing's fixed. They're going to print money. The U.S. is running an annual deficit of, really, in real terms, $5 trillion. And you're going to sell gold? Dennis Gartman came out just about, 2 weeks ago, and he basically painted an Armageddon scenario. He said that there were going to be possibly forced liquidations, widespread liquidations. He painted this Armageddon scenario. And, actually, when he came out with his, newsletter, he's got a pretty renowned newsletter, Dennis Gartman. I think he traded out of his positions and said he was trading out of positions at around 1675, maybe a little more. And now it's down to around 1550. And so, yeah, he got, a less than 10% hit in a couple of weeks. He bypassed 10% losses. Maybe he shorted the market. I don't know. But see, Dennis Gartman is a trader. He's not an investor. He didn't sell physical metal. That's what I suspect. He just sold his paper, GLD, exchange-traded funds or whatever. And, gold is an insurance policy. Now, listen, I do not pretend to be an expert in gold. People like Jim Sinclair over JS Mindset have forgotten more about gold trading than I'll ever know. But one thing I'm sure he'll agree with me is that gold is an insurance policy, physical gold, and you don't sell your insurance policy. That's like trying to save $50 on a $600 policy, and you cancel your policy on your vehicle for a month to save $50. That's cuckoo crazy risk. Likely the reason why gold has stopped going down is all the physical holders just aren't selling. They look at it the way I just explained to you. And you think about the mammoth risks in the market. The Straits of Hormuz, as I said, being closed down. EU, no end in sight, no plan other than money printing. An annual real deficit of $5 trillion for the U.S. Exposure by U.S. banks, a global possible banking crisis because of this EU thing. And war. Wow. You don't sell your insurance. You don't bet the farm. but you don't sell your insurance. And finally, as this is the last weekly news wrap-up, and I hope there'll be many more, I want to thank everybody for supporting USAWatchdog.com. We had another record month in December, and I hope we have many more records. I'm trying to grow the site. I'm trying to make the site better, the video, the content. I'm always trying to improve, and I hope I do that. Once again, thank you for supporting USA Watchdog. If that's the way I see it, I'll see you in 2012.